Good afternoon.
Hello and welcome to ИнстаФорекс Economic News TV channel with me, Anna Kasatkina.
And me, Kate Nedachina.
You're watching the weekly currency and commodity market review.
What currencies were in the highest demand among investors in the previous week?
The US dollar ended the past week on a positive note against its major counterparts.
And what helped the American currency regain ground?
The greenback moved higher on upbeat economic data from the United States and market speculations that the US Federal Reserve will raise its interest rates this week. US retail sales were reported to have increased by 0.2% in November after gaining 0.1% in the previous month, while economists had projected a 0.3% rise. At the same time, core retail sales, excluding cars and gasoline, ticked up by 0.3%, exceeding forecasts for a 0.3% growth. A separate report suggests that the US Producer Price Index added 0.3% in November, falling short of expectations for a 0.1% drop. The euro edged higher on Friday, coming in at 1.0993 against the US dollar. The pair hit the 1.1027 level in late trades on Wednesday. The single European currency posted weekly gains of 117 pips. At present, strong demand for the US dollar is supported by expectations that the Fed is on track to tighten its monetary policy at the year's final meeting on December 15-16. The rate liftoff is likely to make the American currency more attractive for investors seeking to boost their profits. Meanwhile, the greenback jumped by 0.24% versus the Canadian dollar, hitting fresh highs in more than 10 years at 1.3756. Canada's national currency suffered a dramatic plunge, recording weekly losses of 389 pips. The commodity-dependent Canadian dollar remains under pressure from the ongoing decline in oil prices, which extended their slump throughout the entire trading week. That is all about exchange rate movements on Forex.
Thank you for the currency market overview, Anna.
You're welcome, Kate. What's new on the commodity floors?
Gold and oil suffered a week of heavy losses.
What shaped investor sentiment?
There are gloomy expectations that oil oversupply in the global market will persist over the next year. Besides, the upcoming monetary policy meeting of the US Fed remains in focus. On Friday, oil prices plunged to fresh 7-year lows after the International Energy Agency released its outlook, warning that the global oil glut may worsen well into the next year. The pessimistic projections appeared the next day after the OPEC admitted that its crude output exceeded 3 years high in the past months. In this light, a barrel of North Sea Brent for delivery in January dipped by 4.53%, closing the week at $37.93. The Brent slipped in value by 11.79% over the week, booking its step in weekly losses in a year. January futures for the WTI crude dropped by 3.1% in the New York Mercantile Exchange and ended the weekly session at $35.62 per barrel, close to 2009 lows. However, weekly losses stood at 10.88%. Meanwhile, Friday saw gold gaining ground. However, the upside was limited as market participants prepared for the first rate increase in the United States, likely to occur this week. Gold contracts for February delivery on the COMEX division of the NYMEX climbed by 0.35%, closing the week at $1,075.70 per 3 ounce. However, the metal posted a weekly decline of 0.77%, extending a drastic down swing for the 7th week in a row. In 2015, gold futures are expected to fall by around 10%. Gold is headed for a third straight annual decline as prices have been pressured by the prospects for a rate hike by the Fed for most of 2015.
Kate, thank you for the commodity market overview.
You're welcome, Anna.
You've been watching the weekly currency and commodity markets review on ИнстаФорекс TV channel.
It was presented to you by us, Anna Kasatkina
and Kate Nedachina.
Have a nice day. Goodbye.
See you.